Welcome to well priced theories and premium versus discount. So why is this important? Why is this an element that we've added into our analysis? Well, you've probably heard of premium versus discount before, buy low, sell high, vice versa. And it's more than just doing that, right? At first you might think, oh, we're just selling high and buying low and doing that day after day. But you've got to, first of all, implement that into your directional bias anyway, whether that's follow through, no follow through, or strong follow through, and then decide, which is really important, are you counter or are you pro bias? Because if you're trading counter to that directional bias and counter to the trend, then your strike rate is going to be slightly lower. Still be profitable, but you will take more hits, you'll take more losses compared to trading with the trend, obviously. And what we've done then, rather than just having a 50-50 split on that premium versus discount, is we've introduced a well-priced theory. What does this mean? I'll show some chart examples shortly. But it basically is an additional layer on that trade, and it's increasing your strike rate by removing some of the noise and filtering out some of the lower probability trades, which tend to happen around that mid-range at that EQ level. Especially again during small 4-hour ranges, but even larger 4-hour ranges. You will notice that when price comes to the EQ of a range, it does tend to accumulate and you will take more hits trading that soon. So if price sweeps into premium and your entry is at discount, for example, if you did that, if you took every single setup over a period of 12 months on a single pair, you would come on top positive, but you would take a lot more hits than if you just filtered those out and took them at better priced areas. So if you're selling, you want to be in the top 45%, and if you're buying, you want to be in the bottom 45%. And again, I'll show you some chart examples to go over this. So this first example here is basically following pro-directional bias. We've had follow through to the downside. We initially, when you look at it, had unconfirmed bias. We had this one bearish candle, and then we had no follow through. So we're looking at a reversal, we're looking for buys, okay? Now, when we had a second bearish candle close, which if you zoom in, you'll notice is this one here, that's when our bias switches back to follow through. So unconfirmed, then no follow through, and then when this candle closes, that is follow through. So the following day we're actually looking for sells, and we'd only be looking for sells in premium. Now this red zone is what we've filtered out as that kind of lower probability trade area. It's not to say that we would never take trades from there, and it's not to say that I would recommend you not take trades from there. If you're happy taking more losses and having a lower strike rate for potentially a higher risk to reward ratio at the end of the year, then you go for it. Tried and tested over 12 months on multiple pairs, it does play out, but like I say, you'll have a lower strike rate, be more in the 40% than the 50% if you do that. So let's just kind of bar replay a little bit back on this so I can show you the 15-minute. And there's a couple of entry ideas on here. So we get confirmation of follow through during London or after London here, and then it pulls up during New York, and inside New York, we would be in a discounted zone, right? Now, there are no liquidity sweeps inside New York session anyway, but obviously if you were taking any trades in here, one, you'd be in discount. The actual EQ is this midline in here, and most of you are switched on enough and have seen the content that you wouldn't be taking any pro trend sells in discount anyway, unless it was strong follow through. In this case, it's not. And here we're outside of kill zone. Now this first 15-minute range is where we're at before London. And although you can see that price is now in premium above that middle EQ line, and there's some setups here, but they don't play out. And I'm not saying that well-priced theories will eliminate all of the losses, because it won't. It's just eliminating some of the slightly low probability trades. These are still valid, but it's overall helping your strike rate. Like I say, if you're happy to take everything that's in premium for sells and everything that's discount for buys, depending on what your directional bias is, and get your 15-minute entry model and your kill zones correct, you take them all over 12 months and you're still laughing. However, with a lot of you that are applying for funding challenges And with funding, on your list, I would recommend veering away from that and introducing well-priced theories, because you don't want to be taking obviously 8 to 10 losses consecutively, even on one pair, which is possible from time to time, right? So with this one, you can see the sweep happens, yes, in premium, but it happens in this kind of this 5% red zone in the middle. And the entry also happens to be there. And then this second one, which does sweep actually in above what we would say fair price, well-priced zone, the entry is kind of right on that border again. So it's a valid trade, both of them, they're both losses, they're both valid technically, but they're so close to this red area, and I'll put it in the resources on how you can make a copy of my chart and you can have this tool rather than creating it yourself. It would have, filtered out a couple of losses there. Now, if we're pro-bias looking for sells, we've got follow through to the downside, you can see these two entries are way above the EQ. They're nicely out the way. They're what we would consider well priced. The entry model is exactly the same as was in London. This is a New York range high sweep and an extended as well, because that first initial candle which swept, that didn't tag in. So we extended that sweep, wait for that candle to close, and a 3 to 1, and you're in. And all of these have a minimum 2 pip stop loss buffer. We have the next one as well. And notice as well, as we're going through the size of the RR tools and the size of the candles that we're trading, the size of the stop losses, they're all around 9, 10, 11 pips, which is pretty standard of what we're looking for. Again, we get a range high sweep here. It's well priced. The sweep and the entry are way in premium. And although the TP is down here, that's not relevant because we want to get a TP 3% way before the lows that are right down here. So that's the first example. And we're going to go through a couple more examples. We've got another one over here. Again, this one happens to be a bearish follow through. We get a wick and then consecutive 2 candles lower. So we'd be looking for sells, but only in well-priced areas. So we've got a couple of examples here. So let's run through. We've had a confirmed follow through at this point at the back end of New York the previous day. We would be not looking for, again, any trades in discount, but as you get closer to the EQ, we're starting to take liquidity. Now this one takes liquidity between sessions, so again, you wouldn't take that. You wouldn't take the extended sweep either because the actual sweep happened before kill zone, so that would not be valid. And then the sweeps here happen outside New York. Then you can see that price really does start to accumulate around this midline area. And that's where you want to be careful because you can easily be tagged in, tagged out, and then it goes and takes on your original take profit, but without you, right? So here, when it comes up and it takes this range high inside London, it takes it well away from that EQ. It's well priced. The actual sweep and the entry are both nicely in well priced areas. You can see New York would come close depending on what your broker is and what stop loss size you would use. This is like a 2.3, 2.4, which is about standard really for EU. Even using some stop loss coverage over to the left, allowing for a bit more on that because really minimum 2 pip stop loss buffer for EU and rounding up as well is recommended. Even if you did have a tighter stop loss or you had a broker slip you out on that, you would have had an opportunity to get in again. So you'd take a -1 on the first one and then claw that back and be 2% up by the end of the day, taking the second position. But best case scenario, 6% up here. Now, neither one of these are anywhere near the EQ, so they're both well priced. And then we can see the next day, here is an example where we could actually potentially miss out on trades that what we wouldn't consider well priced. If this were to sweep inside London kill zone, which it didn't, so it made it invalid anyway, but this would be just considered too close again. This would not be a well priced entry, even though essentially it would have gone on and hit TP. It's about creating good habits and filtering out things that you've seen time and time again. Like I said before, there's nothing wrong with taking trades around the EQ. You've just got to know and have that perspective and understanding that you're taking a lower strike rate doing that. Now here's a no follow through example where we get this push and a wick close to the upside, and we are obviously looking for sells only in premium again. Let's drop down to the 15 minute and see what we've got here. Looks like there's just one trade on this one. So no follow through is confirmed after New York. Asia is building sell side liquidity. We're looking for sales as a pro trend move anyway. We're not looking for buys in premium with no follow through. And here we've got a 15-minute range, but it takes an internal sweep. Now the sweep is nicely well priced. The entry is nicely well priced away from this red zone, so we're happy to take it. Once that drops down here, again, we're only looking for pro trend here. We've got Asia overnight, so we're not looking for trades there. Potentially get some news. The size of this candle for London Open is pretty large. And also if you took that, you would not be able to get a 3-to-1 to the low anyway. But hypothetically speaking, you wouldn't want to be taking trades anywhere around this red zone, which is not well priced. So hopefully that helped. Again, in the resources channel in Discord, I'll let you know what my TradingView link is, so you can actually go ahead and make a copy and you can use this tool for yourself. Or if you wanted to just create your own, you can choose your own colors. These are the settings I use. We've got the EQ at 0.5 and then the well-priced areas are 45% and 55%.